Well, welcome to the podcast today. And yep, we're going to continue talking to experts this time from the loan side of the area. Welcome, Mr. Stephen Brown. How are you?
Good, Robert. Yourself?
I'm really good. Just so people know, can you tell people who you are, where you're from, and how long you've been giving people money?
Stephen Brown's my name. I'm from Oxygen Home Loans, and I've been a mortgage broker for 20 years.
20 years you've been giving money out?
Correct, yes.
How'd you get into it?
Long time. Well, just one of those things, just happened to fall into it through a friend.
Yep.
Was a asset broker and went from there.
Awesome, awesome. So today we're going to talk about investment loans and buying investments. A lot of people, when they're trying to grow wealth, buy an investment property, but it's not as simple as just finding a property. There's so much more that you have to look into, and so much more you should actually do before you even go and have a look. So we're going to turn around to Mr. Brown, as I call him. Brownie, as he's affectionately known. I've known this man for a long time, so we've been old mates from a long way back. When someone first starts on the investment property journey, what should they do and who should they approach?
Okay, so the first thing they need to look at is to speak with a mortgage broker.
Yep.
And the main reason there is you need to look at, can they afford to purchase a property? Because if they can't afford to purchase a property, there's no use in proceeding any further.
So is that to do with how much equity they've got in their house?
Well,
or if they're renting, can they buy an investment property?
Yes, they can. So it just comes down to their affordability. If they've got the income capacity, they certainly can do it. If they've got some savings, they can do it. And also, if they do own a property and there's enough equity there that they can withdraw and use to help them purchase the property, by all means, yes, we can do it that way as well.
So someone's looking to buy an investment property. In your opinion, what are some of the things people need to look for when they're looking for properties? Especially their first one. They just want to dip their toe in the market. They've never done it before. What should they look for?
Well, they need to, first of all, speak to experts in the field because, you know, people that have previously bought properties and been burnt by buying the wrong property.
So the
first thing is they need to, find out where's this location that suits them, either A, to live in it in the future, or B, do they want asset growth, or B or C, do they want to get, the growth in rent?
So we call that return on investment?
Yes.
Or high yield?
Yes.
So there's two types. We'll go into that in a moment. So when you're looking at a property, there's difference between buying a house and buying a unit.
Yes.
And buying a townhouse, and then buying regional or buying in a big city.
Yep.
Generally, regional have a higher rental return but a lower capital growth in general.
In general,
and
yes.
in the city, you have a lower yield, as we call it, a lower rental, but you have higher capital growth if you keep it over a long time. For someone just starting out, should they look like at a major country town like a Wagga or a Tamworth and get used to what they're doing, or should they go and find a nice unit or house in Sydney?
Well, it's really going to be up to them and speaking to other experts. By all means, I'd put everything on the table, look at city, major country regions, Newcastle, Wollongong, of the like, and then they can, go from there. But obviously, they need to be able to, at some point, go and visit it, because I think that's a good thing.
Yes.
They can see it in the flesh. Do they want to keep an eye on it down the track?
Yep.
Or do they want to, hire an expert that'll do that for them?
So what is rental yield in a residential investment?
Well, it's going to be what's their return after they've paid all their cost, and that'll be the profit they're going to get out of that.
So a lot of people say like they'll get a 3% yield or a 7% yield, and you don't get that really on residential, very rare. And people don't understand, because when they're looking at a yield is, as you said, it can be the gross rent divided by what they're paying.
Correct.
Another thing that people need to look at is high body corporates versus low body corporates, and how much is in the body corporate account when they're buying a unit. How important is that to take an effect from your side when you're trying to help them along the way?
It's key, because in some cases, the high cost of body corporate will reduce their borrowing capacity.
So if someone gets in, and even though they could be earning a lot of money and the rent's really good and the price is right, if your body corporates are high, that then reduces how much they can borrow.
Correct, because that's a monthly cost that goes against their capacity to borrow.
And that comes up normally in the strata report that people
Correct,
get.
yes.
Okay. So for the uninitiated, what is LVR? You and I talk about this all the time, but not everyone out there understands what it is.
It's the loan value ratio. So if you're buying a property of, say, 500,000 and you're borrowing 80%, you know, you're looking at, you need to keep the loan value ratio under 80% because otherwise you'll be paying mortgage insurance, which is called LMI, and the lenders have to charge that because it protects the banks in case the property does, you know, go into foreclosure.
So can someone then get a first home owner's grant on an investment property?
No, they cannot.
No, they cannot.
It's
Awesome.
only for owner-occupied use.
So you're saying if someone's buying a property for $100,000, they need to have a minimum of $20,000 deposit?
Correct, yes, that's right.
Is your goal?
Yep.
But what about costs? Are they allowed to be funded as well?
Well, again, if it's an investor, no. If it's a first home buyer, no. However, if they're using what's called the home guarantee system, they can have their savings and also then borrow additional cost if they're using also a guarantor.
So going on to guarantors, if someone's got a house with plenty of equity, they can still borrow 100% plus costs as long as your 80% LVR is below.
Yes, that's right. They then in turn, you know, cover that cost over two properties.
And can you get a fixed guarantee, as they used to call it, from your parents or from someone else guaranteeing that 20% to bring the LVR down?
Again, only using equity.
Only using equity, yes, yeah.
That's all. But generally, you can have a fixed amount or you can just have a percentage.
So this is really why people should go and see their mortgage broker before they do anything.
Absolutely, yes.
Because I know how you work and you look after your clients excellent. You go through everything with them to put them in the best position to make sure they're not going to make a bad choice.
That's right, yes. Yeah, so the thing is that, you know, what we do is we look at all the options that are on the table and we'll present all the cases to them, find out which is the best solution for them and present that to them.
So are banks these days in this current financial climate open to investors?
Absolutely. You know, they're open to lend money to everyone.
So they've been pretty good at the moment?
Yes.
Mate, that's absolutely awesome. When it comes to managing a property, you will see it a lot of first hands. While you don't worry about the property management side, you will see people that will get a loan, find a property, come to you and say, "Oh, hey, mate, Stephen, I got it. Let's do it."
Yep.
How important is it in protecting your asset to have a good property manager to look after it?
Absolutely, it's key. Also, beyond that, you also need a good insurance policy to make sure that is protected for your property as well.
So what type of, what type of insurance apart from building do you need on an investment property?
Well, you'll need landlord insurance property.
So what's that?
Landlord insurance covers your property if there's any damage to it by the tenants or also by any storm or other foreseen circumstances.
So what happens if you end up having not a very good tenant and they trash the place? Which does happen, very rarely, but it does.
Again, you'd need to check out your insurance policy.
So if you don't have any insurance, you're up for it?
Correct, yes.
I mean, you can take the bond, but that's about it.
Well, you know, that may not cover it.
No, well, in many cases it doesn't, does
that's
it?
right, yeah, exactly.
Yeah, it's there's a lot of, people don't realise buying an investment property isn't just about the property. I actually spoke to a client the other day and he was asking about which property in this area, and I found him a property and he said, "Oh, that's great. It was like an 8.5% rental return." And he said, "Oh, we should buy that one." I said, "Yes, but in the last 10 years, they've only had 1.7% capital growth." So, and the banks look at that. They see the capital growth. They look at capital growth along the insurance of protecting their property. They want to make sure that where someone's buying is going to increase in value.
Well, they also want to make sure that, you know, the client is looked after and they're protected as well.
And you can have the other way around. You can buy a property that is high capital growth, where it's booming in an area, but low rental return. In other words, the rents are low because of supply and demand. And that is something you've got to look into, isn't it?
Correct,
and you
yes.
look at it, yeah.
Yep. That's right. You know, that may not be, you know, the best solution for them. Again, that's why they need to look at finding an expert in that area to help them with their property search.
Yeah, well, that's where we come in, of course, as buyers agents. We
Correct,
do that.
yes, that's right.
And people say, "Oh, you know, they worry about that," but we do all the data. And quite often, if we get an investment property and we're doing it for a client, a good buyer's agent liaises with the mortgage broker as a stopgap, because you're checking each other's figures. You're checking to see what he comes up as the price and what we come up as the price, and you work together to look after your client. And that's very, very important, because on both sides, you know, sometimes things get missed or things get, you know, have you thought of this? Oh, this is really good. we need to move very quickly. And that's where having a good mortgage broker and a buyer's agent working together, like Brownie here, can make a massive, massive difference. Rent investors, we call it.
Yep.
We were talking before, can someone who's renting, who doesn't have, who but wants to say live in Sydney, and it's, you know, a 2-bedroom apartment, say in Coogee or that, you're looking at 1.5 to 2 million in many cases, sometimes around the low million, they can't afford to buy, but they've got a lot of borrowing power. Can they then go and then buy, say, in Wagga or in Port Macquarie or the Gold Coast and get another rental property?
Absolutely. It's going to come down to their financial position. You know, if they have enough capacity in their income, they by all means can continue to rent where they want to live,
Yep.
and also buy an investment property outside that area.
And what about self-managed supers with investments? Now, you can't live in a property if you're buying your self-managed super. Are the rules around buying a self-managed super through the banks stricter?
Well, it's the government that controls the self-managed super fund position.
Yep.
And by all means, you know, you can go and buy an investment property through your super fund, but at the end of the day, you can't live in it.
Yeah, and what about that? There's not that many banks who will lend for self-managed
No,
supers.
that's right.
Are they stricter than a normal bank in that and self-managed supers?
They are. They've got to follow the guidelines
Yes, by the government.
by the
yes.
self-managed super
Yeah.
fund board. But by all means, yes, you can still borrow against a property for a self-managed super fund, but there are less lenders available.
So before we wrap up today, if a young couple came to you, they've got a good house, they've got a bit of equity, and they're looking at their first investment property, what do they need to bring to you as a mortgage broker so you can start the assessment to get them down the right path?
Pay slips, bank statements, a bit of background on their financial position, employment history, and we can go from there.
And don't hide the fact that you've got a credit card hidden up the back because Brownie
Yes,
here
that's
will
right.
find out
Yeah,
about it.
Absolutely, that's for sure.
Guys, thank you so much for listening today. We're going to continue our series. We're going to do a whole heap more of this, all on different topics. A few other mortgage brokers talking about something that's specific to them. This man at Oxygen Home Loans, he is based in Sydney. And Mr. Brown, how do they get in touch with you?
By all means, they can give me a call on my mobile, which we will put online, and
Yep.
also if you search Stephen Brown Oxygen Home Loans, it'll come up.
Well, thanks, guys. You have an absolutely groovy week, and we'll catch you next week. Thanks very much.
Cheers.